What's going on, guys? This is Aaron from Departures Capital. We're here with John Feneck, CEO of Feneck Consulting and Portfolio Manager in the mining and energy sector. How are you doing today, John?
Great, Aaron. Thanks for having me for the first time.
Yes, for sure. So can you start by telling us a bit about yourself and your experience in the mining sector?
Sure. So I started in the business in 1992 with Merrill Lynch and was an analyst on a large mutual fund, which is extremely large today. It's a BlackRock fund. Basically have been in equities my entire career for 30 years, and I really have a passion for it. I got into precious metals and mining back in 2000 when the market started to tank for tech, and I went to my advisor at the tender age of I think 29 and said, give me some ideas here because I'm losing a lot of money in these names. And so he said, have you ever thought about gold and silver? I had never bought it before. I started to buy the physical, and then I got into the stocks, and it fast forward 21, 22 years, it's been a great run. And we started our own portfolio back 6+ years ago. So people can go to my website, fenneckconsulting.com, and check out the performance tab. We're very proud of the track record we built. And as we were talking about off camera, I'm a grinder. I'm at the computer every single day and trying to find, alpha generation for clients.
That's a very interesting story. So, the mining sector has been through, quite a few ups and downs, I'm sure you've been through, but many investors remain bullish like yourself. So what are your thoughts on the current situation, and why should we be excited for this year specifically?
Yeah, great question. So, if we did this 18 months ago, everything would have been like buy anything with the word gold in it, right? So now you have to be using what we call a rifle approach. You can't just buy anything because all these things are getting taken down or rising based on their actual fundamentals, which is the way things should trade, right? So, we have held in there with a lot of the names we started back in, say, fall of last year when things started to really turn for the worst, and adding to positions. And it's something I put out literally an hour ago to my followers. I said, hey guys, look at some of these returns we've had today. If you were dollar cost averaging down like I was in these names, meaning, hey, if we started a stock at 10 cents, we bought it again at 8, we bought it again at 6, we bought it again at 4 heavily. Well, now our blended cost is, maybe 6.5, right? It's not 10. And so if a stock goes to 8, then we made, a lot of money, right? So it's like you have to continue to buy the names you have conviction in. So to me, to answer your question, Aaron, December 15th Fed meeting was very important in the sense that Newmont NEM got a huge bid right out of the gate. You saw it go from $51 that day all the way to 66 recently. I went on a show like yours last week and said we blew out of everything at 65.22, not because I dislike Newmont, but because I wanted to deploy that capital into some of the smaller names. And I held Newmont for 6 years. So we're not just traders. We will hold core positions, but it's like, hey, when we see, big money flow into a stock like that for 5-6 weeks, we're going to take some profits.
No, definitely. So what are some of the biggest catalysts for precious metal investors on the horizon that we should be looking out for this year?
Yeah, so I think what you should be looking for is CPI continuing to run hard. We've had a number of positive, high reads, as you know. I would also argue that you need to look at other economic, data in the U.S. Being a U.S. manager, I would say non-farm payrolls are extremely important. Every single first Friday of the month, mark your calendars for 8:30 in the morning Eastern. It's coming this Friday. The estimate is a growth of 200,000 jobs. I think that's a joke. I think you're going to get a much lower print than that. If you look at the trend over the last 5 or 6 months, it's been missing, month after month after month. And if you saw the ADP read this morning, it came in at negative 301,000 jobs, despite the estimate being closer to 265 plus. So when you keep seeing these, no job creation numbers, I don't think the Fed can just ignore that. They're going to have to look at the entire picture, right? So as we sit here right now, I think Bank of America is saying 6 rate hikes this year. JP Morgan's at 4, Citigroup's at 4, Wells is probably at 4. I'm not 100% sure on that. These are banks. They have the incentive to say, we want higher rates, right? It helps their bottom line. So like you have to look at it as an investor pragmatically and say, what would 4 rate hikes do to the market? We're freaking out over a 1/4 point hike in March, right? So like, this is something that I disagree with. I think that 4 rate hikes this year would be destructive to the broad market.
Couldn't agree more. I think that's we'll see. Anyways, when it comes to selecting a mining company to invest into, what is your criteria and what do you look for?
Yeah, it's a great question. So the first thing I look for is management. A lot of people say that, but for us, it's not just about experience, it's about communication. I'll give you an example. So, Canadian Palladium is one of my Canadian Palladium stocks. It's a
Mhm.
Palladium play that no one really tracks. There's no analyst coverage. When you go to their website, the last news item was September, right? As an investor, I've been getting a lot of questions about that stock because they say, well, hey, if this company has put out news, are they going bankrupt? Um, I talk to the CEO all the time. Wayne's a very accessible guy. It's just that news flow hasn't been there for some of these stocks, as you know, Aaron, for a number of
Mhm.
weeks or months because of delays at the lab. Has nothing to do with the CEO or management. It's simply there's no turnaround time on some of these results, and it's very frustrating. But hey, I encourage people to pick up the phone and call someone like Wayne, call a CEO, call a head of IR, get it done. It's like that's what we do. So if you can't do it yourself, don't have the time, align yourself with someone like myself who's doing that work. I've talked to 11 CEOs in the last 3 days. It's like we're on the phone constantly trying to get information, public information. So when a news item comes out, Aaron, we're going to say, hey, tell us about these drill results. Why are they meaningful? What do you have coming down the pike that you can tell us publicly? Oh, well, we put out this report that says this, this, and this. I mean, I don't have time to read a 100-page report. Sometimes it's very helpful for me to get a skinny from a CEO to say, look, you need to be looking at this and this coming up in the next month or two. It's public information. I just don't want to read it, right? It's like I'll pick up the phone
Mhm.
and leverage those relationships. So for me, it's always been about management. In 0809 crisis, I got to meet Keith Neumeyer at AG, Mitch Krebs at CDE. These guys became, friendly with me because I was calling them at a difficult time. And I was saying, hey, tell me a little bit more about why you think it's a good entry point here. Secondly, we try to avoid finances. Okay, so like meaning that if a company really needs to cash up, you can notice that on their news flow, right? If they haven't
Mhm.
done an offering in a year as a junior explorer, the chances are they're going to have to raise some money at some point, right? It's like so why should I be buying it here if they're going to take us down another 15% tomorrow? So these are the kind of things that are avoidable, right? If you do the work, sometimes they're not, right? If you
Mhm.
hop on a big news results, that company will do a financing right in the strength maybe the next day. So some of it's unavoidable.
Definitely agree with you on that one. So, what are your thoughts on the tech space, the recent drop in valuations? Where do you think we go from here? And I guess how is that going to influence, the precious metal sector, let's say?
Yeah. So, I've in full disclosure, I don't have any tech holdings. Like, I mean, I am short some technology right now, and I short that through an ETF, and specifically the semiconductors over the last maybe 4 weeks or so. This is not a long time hold for us, but I think I say that because we're coming off a 13-year bull run, and a lot of that money has been made in technology, right? So I think that you're going to get some disappointed people that are just sitting there with no strategy, and their strategy is backward looking, right? It's like, well, hey, this worked for me in the past, so I'm just going to keep doing this. That's not a strategy. So I think that how it relates to gold and silver is like gold and silver will get a bid if you start seeing technology sell off because people will want to hedge their investments, right? Big money is already starting to do that. You've seen gold, not break 1750 in a meaningful way in many, many weeks, right? So like everyone who's talking 1570 test or a 1500, I see TD Securities just went short gold. It's like I don't really know what you're looking at. If you've got Ray Dalio and a bunch of smart billionaires buying gold, they're buying it for a reason. They're not buying it because they're going to get outsized returns. They're buying it for protection.
Agree with you on that one. So, the market seems to have factored in the Fed interest rate hikes. With these inflation numbers, should we not be seeing gold move higher? I know it's been stuck in this range for a while, but what are your thoughts?
Yeah, we own zero gold, okay, and I get flack for that almost every week, right? I don't make any apologies for it because we have owned gold in the past from the
Mhm.
1100 run, January 16 to now we've owned it many, many times. I personally don't own it right now because I want to own gold stocks, that have
Mhm.
leverage to the gold
Mhm.
price. if gold breaks 1850 in a meaningful way, we all know gold stocks are going to rally hard.
Mhm.
This is, us coming out of a very, very beaten up situation here. And by beaten up, I mean September 1st of 2020. Let's just call that the high, as a round number. That's 16 plus months ago. I mean,
Mhm.
these corrections, Aaron, as you probably know, if you read Jordan Rayburn and some other technical guys like myself, they say 6 to 7 months is usually what you can expect in a downturn. This has been a double plus. It's like very painful, hard to watch the screen. So to answer your question, I mean, I don't care if we're range bound on gold from 1750 to 1850 all year. A lot of these producers like BTG, NEM, AEM, all are going to make a lot of money because their cost of production is way lower than 1800 an ounce.
Definitely. So, which mining companies are your favorite and why, if you had to pick?
Sure. So, I've mentioned some of the larger cap names. I'll mention a few of the smaller names that we like. One that comes to mind is Aftermath Silver, which is AAGFF. I've known Michael Williams for a couple of years now, the chairman, and Ralph, the CEO, just both straight up guys who are building something there in Chile and Peru that a lot of people aren't aware of. The stock hit $1.37 US. Geez, I mean, like last January. So
Mhm. Not long
literally
ago.
about 13 months ago. It closed today under 27 cents. So when you look for value, as we do, we're a value investor. We don't chase anything. We'll basically just hit the ask if something merits it. And today we hit the ask at 0.2630. I mean, it's like I can't believe I'm getting prices like this on a stock that everyone wanted over $1 and no one wants now at 75+% off, right? So, I would mention that they're drilling at Barranquilla, which is in Peru, and that is going to open some eyes hopefully as the year progresses. But they're very smart guys. They're building these open pitable situations in South America to be economic at low silver prices, right? And we don't know exactly what that number is yet because they have to put out more information. But I would just say that if it's $17-18 silver, it's a home run if silver crosses 25 with some authority to the upside, right? A lot of projects out there are not economic, at least until you get to that $20 to $25 range as you look at the junior space. Another silver name that I like that also has some gold is Golden Minerals, and that's AUMN. I followed the stock for 10 years. I've known Warren, the CEO, for about 7. The stock gets very little credit for what it's achieved over the last year, which is going all the way from an Explorer code to a producer in Mexico. So when you look at current prices, rodeo production has been amazing. They've done everything they said they were going to do. The next step for the company is, do they want to expand and use that mill nearby that they're using for rodeo and share it with Velardania, which is a much, much larger deposit? And I said this on a couple shows before, but I encourage people to go back and look at a 10-year chart. The last time they went into production there was 7 years ago, 2015, and the stock went from 50 cents to $1.51 in less than a month. I don't see any type of explosive growth like that this time around, but absolutely do see some growth if the company surprises people and goes back into production there, because that is a much bigger, cash flow generator than rodeo is. Looking at gold, I would say that there's a couple of opportunities there. One is Idaho Champion. It's just got a bid today for the first time in literally like 2 or 3 months, and that's GLDRF. 100% owned properties in Idaho, 2 of them, run by a guy in Jonathan Buick who knows what he's doing, has much experience not only in the US but overseas in Asia. They are getting zero credit right now for their cobalt properties, which are in Idaho. They have over 650 claims on that trend, which is the most of any company that I've seen. And yet some of the peers that are there in the cobalt space are beautiful looking charts. This does not. And so, you have to look as an investor and say, is this company going bankrupt? No. Do they need cash like every other junior? Of course. So, it's not like a guarantee. Nothing is in this space. But there's a great, we look at everything, Aaron, like risk reward, right? What's the risk at 4 cents US versus the reward of where it did its last financing at 12.5 cents US? It's like, it's probably somewhere in the middle there. So, another final name for you, I guess, in gold would be US gold, USAU, trades on the NASDAQ, $7 even closed today. I'm just shocked that the market didn't embrace their PFS more that came out in December. The company had been talking it up for a good year. Yes, when you do a updated PFS in this market, you're going to have to factor in higher commodities prices, right? We saw that with Argonaut. We've seen that with a number of different names in the space that are getting taken down because, oh, I didn't know that all these costs are going to cost us more money. Well, of course they are. It's just as these companies are going to do more work that is current, the average investor is going to realize that commodity prices have gone up a lot. Their CapEx has gone up a lot on the project, and metals prices haven't gone up as much, right? So I think that the market has taken it down from 11.63 to $7. It got to $6 last week. I mean, it's a U.S. company with 4 projects on the NASDAQ. In full disclosure, that is our largest gold stock.
Thank you for sharing that. So for our younger viewers who are interested in investing in the mining sector, can you give them some guidance or advice on how to get started if they're looking to invest in the sector? Because I know, that's
Sure.
one of my big goals for my channel, and it always has been, was to show the millennials, why they should invest or potentially invest into gold, silver, and the commodity sector versus all of the, tech and crypto and all that other stuff.
Right. So a couple of thoughts. First is you have to align yourself with a professional, okay? And some of the people on seekingalpha.com are just not professionals, in my opinion. They're cheap, right? So like if you're a 20-something, 30-something, and you want to spend $10 a month on something, you get what you pay for, right? Some of these people do not call CEOs. They don't have my track record. They don't have my competitors' track records, right? It's like, so spend some money. If you're serious about it, don't put $10 a month of work, and hiring someone. That's not getting it done. We're at a very, very low point in mining stocks right now. This is when you want to hunker down, align yourself with someone like myself who has experience in the space, and pay some money for great advice, right? It's like, leadership is important in anything you do in life. So that's my advice, number one. Number two, there are some great services out there, that you can get some really good data. If you're analytical, I think goldstockdata.com, run by Don Durrett, who's one of my competitors, does a great job. I don't know what he costs currently, but I think it's like less than $10 a month or $15 a month if you average it out over the year. But he's got an incredible database of gold and silver stocks that you can get information on. And like myself, he will talk to CEOs and gather that data. So, but really, we teach our followers to put stink bids out there also, Aaron, in terms of buying the junior market. A lot of people are anxious, right? And they hit what we call hit the ask. They just buy at any price. They put a market order in or put a limit order in at the ask. That's not how we coach people to do it. If a stock's trading at 10 cents bid, 11 cent ask, we're out there at 10:01, 0.1001, and we're just waiting ahead of the big boy to get filled. And that price action all day could be 10.5, 11, 11.5. Guess what? Sometimes it's going to come down to 10:01 and we're going to get filled and we're not going to chase it. And that's how we coach people. So that over time will add up to add a lot of money to your bank account if you're not, just jumping the gun on things.
Definitely. I think that's great advice. And, thanks for sharing all that information. I look forward to having you back on, John, and hope you have a great day.
Appreciate it.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.